My name is Taylor Zork. I'm one of the co-founders over at CryptoCFOs. We're an educational platform for CPAs, um, finance folk, tax professionals who are looking to enter or are actively involved in the Web3 and crypto space. We see tax planning and just crypto taxes as a huge revenue opportunity that's missed out on a lot of folks. And with crypto and with tools like endowments, you can provide a lot of additional value to your clients that may not necessarily have been in your wheelhouse previously, but can really be a tremendous part of your revenue growth into the future. So future-proofing your business and all of that. One of the nice things about tax planning is that it allows you to have touch points with your clients throughout the year, which can allow you to justify things like subscription models where you have more of a more consistent revenue stream throughout the year. But today we're going to be focusing a lot on just the overall inevitability of crypto adoption, how you can dissect and glean information from on-chain data, and how firms can capitalize on the opportunity through various value-added services. So like I mentioned before, providing tax savings through on-chain giving, like through opening a DAF with endowment. That's a really great tool that not a lot of folks are aware of. And it allows your money to go further, right? If you are able to donate crypto assets and those appreciate in value, you don't get dinged for that additional capital gains, yet your philanthropy goes further. So being aware of not only the opportunities in the crypto space from a tax professional standpoint, but also the additional value that you can provide to clients will, like as Jay was alluding to before, will increase the strength of those relationships that you have with clients and continue to help future-proof your business and your firm into the future. So I wanted to talk a little bit about, the three aspects that we're going to talk about in this keynote today are Bitcoin on balance sheets. So just digital assets in general, will we see things other than Bitcoin on balance sheets as well? The bipartisan support that we're starting to see in the political environment in the US towards crypto and digital assets. And then the big institutional adoption that we've started to see this year specifically in crypto. We saw the ETFs launch for both Bitcoin and ETH. And we see that a lot more momentum is coming our way as well. So kind of diving into Bitcoin on balance sheets, a really big headline grabber this year was when Semler Scientific, which is a medical device maker, they added about $40 million of Bitcoin to their balance sheet in the end of May. And as of June, they held 828 Bitcoin with plans to expand their crypto treasury. So Semler Scientific is continuing to add Bitcoin there. And they've got plans to raise funds to purchase an additional $150 million in Bitcoin. The $40 million add of Bitcoin back in May shot their stock price up by 25%. And in June alone, as of June, collectively, publicly listed companies hold 308,000 Bitcoin worth approximately 21 billion. So let's just kind of take a step back here. Why would publicly traded companies start to add Bitcoin to their balance sheet? We saw this back in the 2020, 2021 bull run where Tesla started to add Bitcoin to their balance sheet. But we all know that like with Elon, there's oftentimes things that happen that are just kind of bonkers and a little bit off the cuff. So it's less impressive to see a company like Tesla do that because we all know how much of a loose cannon that Elon can be. But when a company like Semler Scientific that has no ties to the crypto industry at all from the outside perspective, why would they be adding something like that to their balance sheet? Now, the explanations that I can see from this are that they're looking to start to hedge against potential inflation, right, with their rising costs over time. So they're seeing Bitcoin as major companies like this, they hedge their assets so that they can protect their core business, right, into the future. And so they're starting to add Bitcoin as an inflation hedge. And a question that I often get in this industry is do I think, companies like this will start adding other digital assets to their balance sheet? And I think that to answer that question, you really have to start to understand what digital assets what purpose they serve, right? Bitcoin has been largely held as an inflation hedge. It's been held as a store of value, and originally it was also meant to be a peer-to-peer payment network, but it's less used as that, and it's more used as a store of value. Something like Ethereum, however, is more of a tech. I equate it more to a tech stock, right? So you have, it'd be like if you were to add Amazon stock to your balance sheet, right? Be highly speculative. It may potentially be a great investment as a company, but not a lot of companies rush to do that because you're not in the business of speculating. You're in the business of protecting your company and as a going concern, right? So I think that it's important to note the main differences here. And with something like Ethereum, if you're a business that actively is involved in the crypto space, or you have a use case to be able to, as part of your core business, to leverage blockchains, it may be important to hold something like Ethereum on your balance sheet because you are protecting against the potential future appreciation in price and gathering ETH that you'll be using for fuel to fund transactional activity at a hopefully lower price now than in the future, right? So I do see more companies like this adding assets like Bitcoin, primarily Bitcoin, when they're not when they're kind of like tangentially in or not involved in crypto at all, just as an inflation hedge. But some other companies that are more in the crypto space, like for example, Visa has started to provide settlements on chain. They may want to pick up some Ethereum because it's going to potentially go up in value, and they might want to purchase it now at a potentially lower price. So I think that it's important to see these trends happening, and this has flown into the bipartisan support that we're starting to see for digital assets. Earlier in the year, we saw a more hardline stance from the Biden administration, but then we saw some softening in the language that they were using around the digital asset space. Also, more recently, we saw at Bitcoin Nashville that Trump attended, and we had RFK attending as well. Both gave speeches. This is the first time where major political candidates have attended these types of events. And so Bitcoin Nashville, it's the largest Bitcoin conference that happens on an annual basis. And last time I believe it was in Miami. But this year in Nashville, we had commitments, or at least plans from RFK, for example, to create a strategic reserve of Bitcoin. He talked about purchasing up to 4 million Bitcoin, which is a significant portion of the total supply of Bitcoin. And Trump echoed many of the similar lines that RFK was saying. However, he didn't quite go as far as RFK was going. But I think it's important to note that the political environment is shifting, and this is becoming more of an issue that's in the forefront of discussions in the political environment. So I also saw some rumors that Harris was going to attend the event, but that never ended up happening. But if you start to think about the implications of political candidates starting to buy up Bitcoin as major, central banks, right? It's really important to understand the game theory that's involved here, because if the U.S. starts building strategic reserves in Bitcoin, you undoubtedly will see a rush from other countries to purchase more of this. Additionally, we're starting to see big institutional players here. Oh, sorry. So getting back to like the political environment, all of this, we started to see the issuance of additional regulations on Form 1099-DA and the reporting requirements that are going to come along with this. So the Form 1099-DA is a new form that's coming into play in 2025, where so far we've only received final regulations on the custodial brokers. We're still awaiting information and final regs on the non-custodial brokers, which I think is going to be an interesting thing to watch for in the coming months. But when you think about what has happened since those broker regs were finalized in June, we recently got an update on those, and they've started to soften the requirements on those as well. I think that there was a box on there for if the the person that they were reporting on did not have a TIN. They needed an explanation on that. They removed that. They removed a few of the other requirements, like what type of broker it is. And so I think overall, we're seeing from a regulatory standpoint, a softening of the initial regs that were put out. And I think that that's indicative of what direction we're moving in the industry. These hardline regulations are released initially, and then they're walked back a little bit. I think that that will continue to happen. And I do think that, and I'm hoping that, this is kind of wishful thinking, but I believe that we might see a greater softening on the non-custodial broker side of things, because when you think about what the impact of the regulations as written would be on non-custodial brokers, so that's decentralized exchanges, that's certain wallet providers like MetaMask that have a built-in swap component that leverages decentralized exchanges as well. The impact that the broker regs would have on these protocols would be basically to force them to geo-block US participation, or start collecting data that they've never required their users to collect, which may cause users to go elsewhere. And if you know anything about how these decentralized exchanges function, it's not hard to spin up a clone of Uniswap or PancakeSwap or any of these decentralized exchanges that exist. What they run on is code. And so copying and pasting and moving that, I think you'll see a lot of kind of copycat dexes where either it becomes more of a Wild West where you're kind of having to jump from different dexes to different dexes, or we will see hopefully a softening of those broker regs from the non-custodial perspective. So there's been a lot of kind of changing in the momentum of the regulatory landscape. And I think that because of the pushback that was received related to the original final regs for custodians back in June, that's where we're starting to see that walk back. And I think that we'll continue to see more of that walking back. So, and then getting into the big institutions. So as we know, we saw that the Bitcoin ETF launched in January of this year. Initially had a little bit of sell the news, but then has really impacted the market and added a lot of, has pushed the price of Bitcoin up quite significantly. We've seen a lot of inflows, a lot of outflows. Primarily, some of that was to do with, the Grayscale trust that was in existence that had been trading at a discount. But also we saw the ETH ETF launch in July. And so if you remember the headlines coming into the ETH ETF launch, there was a lot of people who thought that with the SEC opening an inquiry into the Ethereum Foundation and I believe it was Consensus, there was a lot of speculation that the ETH ETF was not going to get approved. And then when we talk about kind of the political winds changing, it seemed like all of a sudden the floodgates opened and they were kind of more open to the ETH ETF. And then things started moving really quickly and we got the approval in a matter of months after that. So it's really interesting to see the impact that big institutions play in all of this. And I think we're going to continue to see a battle between the banks and the institutional investment firms, where they've traditionally had a lot of overlapping interests. I think that digital assets causes a rift between the two. So I think we'll start to see more of a kind of a battle between those two sectors. We also have the largest asset manager in the world involved now. BlackRock has both a Bitcoin and a spot ETF offering. So all of this is to say that adoption is here. It's not just coming. This is not just a niche industry. It's a necessity. We are moving towards a reality where digital assets are a fundamental part of financial planning, of tax prep, of financial services in general. And I think that I always like to draw the analogy back to internet accountants of the late 90s and early 2000s, right? We had folks calling themselves internet accountants because they knew how to use email or they were doing stuff with websites or things like that. And right now, while I feel it is necessary to call yourself a crypto CPA or a crypto CFO, I think that that's going to be an implied aspect of your job in the next 5 years. And so if you're on this call, you're moving in the right direction already. But I do believe that we are on the cusp of this being just a ubiquitous technology that a lot of people don't even know that they're using in a lot of ways. And that's where we're going to see the real adoption here. So as a tax professional or an accounting professional, there are tremendous opportunities in this field, and it is massively underserved. So part of our goal of today is to not only help folks understand what the opportunities are from a perspective of, what service offerings can you provide to folks to be able to future-proof your business and increase revenue, but also what are some of the actual practical things that you can learn to better understand how to read on-chain data, and actually build a Web3 practice. So that's the goal of today, of Crypto CFOs and of this Onchain Giving Summit hosted by Endowment. I'm really glad to be connected with these folks because I personally, I am less on the tax prep side, but I am getting more into it now. And I love the idea and the ability to offer additional value to my clients through tools like dApps to be able to increase philanthropic giving, but also provide that additional tax benefit. So I just wanted to, introduce myself, give you a feel for what you can expect for today. We have at 1:30, we have Building Your Web3 Practice with my co-founder, Brandon Santiago. He is our marketing guru and the man behind everything you see in Crypto CFOs. I'm excited for that one as well because he really has great insights. He's built, he's really done a good job of finding great niches and teaching folks how to level up their practice to really capitalize on that. He and my other co-founder, Brian, built Brian's cannabis accounting practice from 0 to 1 million in revenue in a matter of 2 years. And that was largely because of the marketing efforts that Brandon helped Brian implement. So if you're looking to break into Web3 and crypto, that's a session you absolutely do not want to miss. And then we have a good friend of ours at Crypto CFOs, Adam Blumberg of Interaxis, and I'm blanking on their other the firm name that they have as well. But him and Matt McClintock are going to be talking about upping your game, structuring for next generation donors. Those guys are super knowledgeable. They are amazing. And they did a session with us at our Crypto Tax and Accounting Conference. And that is something you will not want to miss. Absolutely huge value add there. And then at 3:30, I'll be going through reading on-chain data. Here I'll talk through what tools you can use for free that exist that help you understand what's going on with a transaction so that you can limit the amount of times you have to ask a client for what's going on here. And also where you can really take steps to locate other potential addresses that the client has that they may have either forgotten to tell you about or may have just omitted by accident. So those tools are really crucial because if you've ever worked in this space, I don't think I've ever had a crypto reconciliation client where they gave me all of the data up front. So that's always a challenge. And so it's really, really important to be able to understand how to read on-chain data here. And then finally, we have a networking event at 4:40 where we're going to just meet with everyone, talk shop, and have just some great conversations and hopefully make some good connections there. So I hope everyone is excited for today. I know I am, and looking forward to the rest of the day and the panels. And just a quick note that the networking event is a big open meeting where we can all meet and connect. So I think there will be some booths as well, but we're going to have a nice event there. So we'll all head into the next session here, and looking forward to speaking with everyone. Take care.